Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, co-founder of InkResearch.ca, Canada's first online financial news. He invented the mid-cap-oriented Inc. Canadian Insider Index, which is used by the Horizons Canada Insider Index ETF, a 2017 Fund Data Fund Grade A award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Thanks for having me back, Jim.
The tariff wars, what are they doing to investment in Canada?
Well, we did our quarterly take on insider themes over the long weekend, and we found that while insiders in Canada are still tilted towards a pro-growth position, they like the outlook for the global economy, over the next 6 months to 12 months. They have pulled their horns in a bit with respect to the auto sector and some of the NAFTA-related themes and stocks in the market, and they've broadened out their bets a bit on the global economy to more, I would say, a more inflation-oriented economy by increasing their exposure to basic materials, gold and other commodity type producers. So it's still a pro-inflation view that insiders have, but they're just pulling in their horns a bit when it comes to NAFTA, I think.
The Trudeau government has made noises about reducing their carbon tax plans. Do you think they're going to follow through?
Well, they've announced some plans that favor a few large emitters. So there's a bit of a damage control. This has been a file that's been poorly handled by the federal government. I mean the whole climate change approach that the government has taken. They got off to a good start, I think, in terms of what they were trying to do. But, Jim, like in any business, execution is what it's all about. You can have the best plans on paper, but if you can't execute your plans, then you look out, you're bound to fail. And that's what's happening with the Trudeau government on its climate strategy. They've managed to botch the Kinder Morgan pipeline file. They've made everyone upset on that, just about everyone. The environmentalists aren't happy, and those, who don't believe government should be involved with these types of things aren't happy. And, let's face it, there was a private company that was willing to build that pipeline. But because of the federal government dropping the ball, they walked away, and now the federal government's holding the can. So it's been a very poorly executed strategy. They've and it's kind of also made its way into this latest dispute with Saudi Arabia, in that the Trudeau wimped out on Energy East. Well, that's coming back to bite him now. He's got very little leverage to deal with the problem that the foreign ministry has created with Saudi Arabia here. So it's the energy file has been very poorly handled by the government, and it's not going to be pretty for them to try and claw their way back. They're running out of time on that, but we'll see. Ironically, the Saudi Arabia diplomatic route here has opened the door for the Trudeau government, if they want to, show that they can build a nation and not just build slogans and take selfies. They could get Energy East back on track under the cover of promoting human rights in Saudi Arabia and a family in Quebec that's right in the center of it. So it's a great opportunity to get Energy East back on track. I know there are a lot of liberals in the Liberal Party that want that pipeline built. So let's see if they take advantage of the window that's being offered to them. I wouldn't bet on it. The way that, unfortunately, I haven't seen a lot of courage in this government after the first year. They were they got off to a great start in their first year in terms of executing, but everything kind of fell apart. Certainly starting last summer with their when they turned their guns on small business and entrepreneurs in Canada, that was kind of a turning point for the Trudeau government. So they've really, they botched the global warming, climate change file. They botched the small business file, and we'll see how they handle this Saudi Arabia human rights issue now.
Has Conservative leader Andrew Scheer weighed in on this? Is he in favor of Energy East?
Well, if he has, I've missed it. And, this is the remarkable turn of events in Canadian politics. I think that the Conservatives are neck and neck now with the Liberals. Now, according to the Nanos tracking poll, Justin Trudeau still has a wide but narrowing gap on leadership in terms of who would make the best prime minister. What's surprising is that it's narrowing, given that Andrew Scheer is essentially been invisible here. So, we're not even at the campaign, and I would imagine that Andrew Scheer's performance will only get better as we get closer to election day. So it's going to be a tough one for the Liberals. They can still pull it off. It's hard to go from a majority government to zero, but in terms of what it means for investors, it would be very nice if we would see Energy East get back on track. But I would say that that's still a long shot. But hey, you never know.
Do you feel the Conservative strategy might be just give Trudeau as much rope as he wants, hoping that he might trip himself up with it?
Well, so far it seems to be working. So if that's the strategy, it's kind of hard to fault them. But eventually they will have to present their own alternative, and then we'll see what happens. But it's kind of hard to fault their strategy at this point, from a political perspective. And the Liberals should really be doing a check on their agenda and their priorities. So we'll see. We'll see what the finance minister has in store for job creators, entrepreneurs in the next budget. But I'm, seeing is believing at this point. I think that's the attitude of most people. Most people sort of centrists and those who believe in private enterprise. They'll believe the goods when they're delivered by Justin Trudeau and Bill Morneau at this point.
Can Saudi Arabia hurt Canada economically?
Well, they can hurt us more if they want to than they'd be able to if we had Energy East built. Now, the last I heard is that they're not going to be playing the oil card. The problem is that Canada cannot play the oil card either because we don't have this pipeline built to Tidewater. So we don't have a lot of leverage. Neither country has a lot of leverage either way. Yes, there are these jobs that are at stake in London, Ontario, building the armored vehicles. There's always something at stake in these battles, but there's also some issues for Saudi Arabia too. So in the grand scheme of things, economically, it's not going to matter to investors in Canada. It will probably matter more if it spins out of control for investment in Saudi Arabia, because foreign investors will probably take a second thought about popping their money into a country that can sort of go off the rails here on things like human rights. So actually, in the medium to longer term, I think Saudi Arabia has more to lose. In the short term, they're smelling a victory, and that they can send a message to other Western nations that don't mess with us, or we'll cut you off. So we'll have to see how it plays out. But it's a real shame that the Trudeau government dropped the ball on Energy East. They'd be in a much stronger position right now to promote their own human rights agenda had they gone through with Energy East. But, this goes to show, Jim, that they're not very good at setting priorities, and to be in government, that's all part of the trick. You can't do everything, but you have to do something. You can't just talk about stuff. I mean, well, you could, but people are less likely to rally around you if you're not doing anything that relates to their own life. So the Liberals, they really have to get back on track if they want to have a hope of maintaining a majority government. But even a minority government for them is in reach now of the conservatives if the ball bounces their way just on a couple of things. So it'll be interesting, Jim. It'll certainly be interesting, and investors, in terms of the outlook, though, what's going on in Ottawa really is second in consideration to Washington. Donald Trump really holds more cards in terms of what's going to happen in the Canadian stock market, I think, than Justin Trudeau. If NAFTA doesn't get done, then we're going to have prolonged agony here. And I'd call 2018 kind of a year of agony for the Canadian stock market. The Canadian Insider Index is slightly above water here, thanks to basically, our third investment theme, hedging bad outcomes of gold and REITs. We have some pretty high distribution REITs in the index, and those distributions have helped the total return stay positive for 2018. That's a very defensive part of the index. So, it hasn't been a great year for Canada, and that I would say boils down to, in good part, the attacks that Trump has made on Canada economically. And, of course, there are other factors as well. The oil price going up and down like the yo-yo hasn't helped. But the Trump cloud is certainly a big one that's hanging over the Canadian market. Let's hope it breaks into some Indian summer sunshine come the fall.
We'll have more with Ted Dixon right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're chatting with Ted Dixon. Ted, what are U.S. insiders telling you about their confidence in the U.S. industrial complex?
Well, we track all the major sectors with our sentiment indicators in the United States, and we've seen a collapse in insider sentiment in the industrials area. So that's important because that is one of the indicators that has been more reliable for us since the end of quantitative easing a few years ago. When this indicator gets below 20%, meaning there's only 20%, there's only one stock of key insider buying for every 5 was selling, usually means that rough times ahead, and that's what we're seeing right now. We've just seen a collapse in that sentiment indicator. That's signaling to us that the risks in the U.S. market are extended for the reward that you're likely to get. The S&P 500 is trying to make an all-time high. I listened to Sean Broderick on your broadcast earlier today, and that's available on CanadianInsider.com, of course, for those who may have missed it. And, he was making the valid point that the U.S. market has momentum behind it, and it does. Now, we'll have to see if that momentum can carry it through to new highs. It's having some trouble here, and we'll have to just see the next few days if after the inflation numbers that come out on Friday, if it can make new highs. Every weekend I make a point of tuning in and listening to Bob Hoy on your show, because he's tracking very closely some of the key indicators that could signal a top in the market. And, I know one of the things that he's looking at are credit spreads and waiting for those to show a definite turn. Insiders seem to be a step ahead of that, at least the industrial side, saying, whoa, the risks are rising. We can see it coming. And, and it may be the Trump tariffs that are pushing it, maybe also Fed tightening that are pushing it, maybe a combination of both. But U.S. industrial insiders don't like the risk-reward trade-off right now. Look, it doesn't mean the top is in for the U.S. market. It just means the risks associated with going higher from here right now are elevated at this point. So, a little protection on the downside. Look, volatility is back to almost, it's almost into single digits again, not quite. Volatility, that's how options are priced off of. So if you're looking to buy put protection, is pretty cheap right now. That's something that, those who have the risk tolerances that would require protection, even if it means losing some money on the options, the insurance for move to downside is pretty cheap right now. So that's something that people may want to consider, at least, based off of our insider indicators.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, in times like this with tariff wars, are there any safe havens?
Well, in terms of what we follow, it's all a game of managing your risk, Jim, and for example, in Canada, we're looking in terms of the safe part of the market, we're looking at REITs, real estate related stocks, not to be confused with real estate, in the ground, flipping condos and the like, but, real estate management companies, REITs that have pricing power, that can give you some protection during a stagflation or an inflation. Is it going to protect you from the downside in the market? Probably not, but it can help you during, periods of consolidation, relative weakness like we've experienced in Canada. So, at this point, it really is managing your risks and being opportunistic enough to spot those opportunities that come along that are oversold that, should eventually rebound once the dust clears. So, it's a tough time, I think, right now for investors. It's always a challenge to beat the market, but right now you've got to decide whether you're going to get on the momentum train and ride that train in the United States to new highs, knowing that it could derail at any moment based off of some bad news. And if those credit spreads start to widen for whatever reason, and usually those reasons are not evident until after the fact. Yes, I know a lot of people are paid to try and project when those turning points are going to happen, and we do our best to send out signals and warning signs and all clears when we can, but insiders are not infallible in terms of, their take on things. But right now, there's certainly in the United States not very upbeat on the risk-reward trade-off. It's not it's not a particularly upbeat message I have for your listeners. And in Canada, it really is, I think, a wait-and-see game on global growth and the tariff war. So it's a tense time in the market, that's for sure. So we'll have to keep a close eye on what happens on those credit spreads, and I'll be certainly keeping my ears open on the weekend to hear what Bob Hoy has to say on those developments.
President Trump has hinted he may have yet another round of tax cuts. Is it time for Canada to take some action to stay competitive?
Well, this is what we'll be waiting for, to see the vision of Bill Morneau and Justin Trudeau in how they're going to ensure Canada's competitiveness. So broad tax cuts appear off the table, which is fine. We don't need to necessarily have the lowest taxes in the world. But we do need to have an overall environment that's conducive to private enterprise, and that means lower regulations, lower tax burden, a combination of that. And until the government in Ottawa, whatever stripe, becomes a champion of unleashing private sector job creation and entrepreneurism, Canada is going to face headwinds against, a reinvigorated United States. Now, the United States will have its day of reckoning at some point, because really what Trump has done, he's taken out a second mortgage on the future. I mean, the U.S. had already had a pretty big mortgage with its medical and Social Security entitlements, but Trump has taken a second mortgage out with his tax cuts. That'll all have to be repaid at some point. So these are not permanent tax cuts by any stretch of the imagination. So it's right for the federal government not to panic over it, but they need to come clear with a vision on how Canada's going to stay competitive. And we're all waiting for that. So far, they've done a few things that are fine, that may work out in terms of innovation, but at the end of the day, you got to make it easier to do business in Canada, because what you'll end up doing is, if you subsidize a bunch of companies like Facebook to come in and do artificial intelligence in Montreal or Edmonton or wherever, then they'll just take all that knowledge that taxpayers have subsidized and they'll implement it elsewhere, in the United States or wherever. So we need to have the environment for individual entrepreneurs to succeed in Canada and to stay in Canada, and not do what John Horgan has done in British Columbia and tax success via the income tax. The property tax is another issue that we could have a whole show on that. But really, at the end of the day, increasing taxes on income for people who go to work, especially leaders in a company, innovators, team leaders. I mean, John Horgan is penalizing those people. He has sent a message saying, we do not want as many successful people in British Columbia. We do not want we do not want to have any more project managers, for high-tech companies. We just want, the low-skilled, lower-skilled, middle-skilled, that's okay. But as soon as you become successful, we want to discourage that, because when you increase taxes on something, you discourage it. And if the NDP don't get that, they shouldn't be in government, okay? So I think they do get it, and really, they're just not philosophically in tune with success. That's not their thing. That, they're kind of a silver medal player here, and, they're happy with the silver medal so long as everyone gets a silver medal. They don't like this idea of some people getting gold, some people getting silver, some people getting bronze. That's not good enough for them. They want everyone to get silver. So, that's the vision that they brought to Victoria, and it's unfortunate, but that's what British Columbia has to work with. They have done some good things on the housing side, but in terms of encouraging entrepreneurism in Canada, you need leaders, you need the top people, you need leadership. It's all about leadership. And when you tax people and you tax leaders, you're saying, no, we want to discourage that. You go down to Texas if you want to be a leader. You go down to Washington State if you want to be a leader. Don't come to British Columbia, because in British Columbia, we only want middle tier workers, middle tier success. Excellence is not our thing. And then that's the unfortunate message that John Horgan is sending with his tax hikes, on people making over $150,000 a year. It's really quite disturbing that philosophy that they have on taxing that kind of income. It's outdated, it's outmoded, and they really need to do a rethink. They should roll that back. They're going to be making so much money on their property taxes and other taxes they brought in that they shouldn't be taxing people going to work, especially those that are team leaders, team builders, company builders, success generators. We need more of that, not less of that, and hopefully the NDP in British Columbia will have a rethink.
Ted, thank you so much for chatting with us.
Well, thanks very much, Jim.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.